A roughly 4 to 5% reduction in bank capital requirements just moved from proposal to reality. And within the same window, silver dropped nearly $4 toward the low 70s. That timing is not random. When banks are given more flexibility, liquidity shifts, and that shift shows up first in fast-moving assets like silver. In this video, I will show you how this rule change is already influencing short-term price movement. Then, I will break down how the reaction is forming on the chart. And stick with me until the end, because I'm going to explain to you how to position yourself over the next 48 to 72 hours. I need to pause for a brief moment. If you're benefiting from this information and want to stay ahead of this before everyone else catches on, hit subscribe. Most people are reading the price, but they're not reading the situation. They walk in thinking they're getting a fair deal, only to realize too late they paid $10 over spot or gave up $10 under when selling. This new change in the junk silver market is a perfect example. Pay attention here, because avoiding that mistake is what keeps you ahead. Lean in close to this so you don't get burned. Here's what changed. On April 1st, updated banking rules officially went live, easing how much capital large banks are required to hold. That means more flexibility in how money moves through the system. At the same time, silver failed to hold above $72.70, a level that had been acting as short-term support. Once that level broke, price moved quickly toward the $71 range. This is how macro changes show up in real time, not as headlines, but as reactions at key levels. Now look at how price behaved after that break. Instead of bouncing strongly, silver struggled to reclaim 72, and each attempt higher stalled faster than the last. That tells you momentum is shifting. When a level breaks and price cannot recover it, that level often turns into resistance. This is where many people get caught. They see a dip and assume it's a buying opportunity, but the structure is actually weakening. This is where the pattern becomes critical. The historical behavior of silver price shows that we are at a key point to be decisive. Sharp rallies often unwind in staircase-style decreases, where price drops, pauses, and then continues lower. Right now, that structure is forming clearly, with levels stepping down from 75 to 72, and now testing the low 70s. If this continues, the next area to watch sits near 67, which lines up with prior support. So what does this mean for you right now? It means you need to focus on levels, not headlines. The rule change created the condition, but the chart is showing you the reaction. If silver cannot reclaim 72 and hold above it, the path of least resistance remains lower. On the other hand, if price can stabilize and push back above that level, it may signal a short-term reset. Because at the end of the day, markets don't move based on announcements. They move based on how those changes affect behavior. And right now, that behavior is telling you one thing clearly. This is not the moment to chase strength. It's the moment to watch where the next floor is built.